So without beating around the bush too much, when things get inexpensive, looking at adding to your investments is a reasonable course of action. Well, we've just come through a period where the markets have exhibited some volatility. In other words, they sometimes seem to careen out of control. You turn on your monitor and the markets are up 300 points, they're down 300 points. These are numbers that are fairly scary when you're watching it in real time. But what I think is important for investors to understand, first off, we've been in a very low volatility environment for years. So when something happens that hasn't happened in a while, it feels like it's novel, like it's something that's out of the blue. It makes it more scary. But what I think is really important to understand is that the volatility we've experienced in the most recent quarter is actually fairly common if you look through periods of history. 10%, 15% corrections in the equity markets are perfectly normal events, and we see them all the time. So I don't think that the event in and of itself is something that should scare investors into sort of hiding under the table, if you will, but it's something that they should be able to take in stride, understand is a normal thing in the course of investing, and understand how to respond to it. Volatility is something that as an investor you get used to. The market is an exchange where buyers and sellers come together every day and try and determine the fair value for a security that they own or would like to own. And there's a divergence of opinion sometimes. Most recently, there's been some tremors in Europe. We've had some questions about energy prices. There's Ebola. There's a myriad of things in the news. I mean, they always tell you that if it bleeds, it leads. So there's always something to be scared about. And every once in a while, when a confluence of those ideas grips the market participants, you can get dislocations. You can get periods of time where prices can fall quite substantially. If we go back 3 years ago, there was a period in time where the US credit rating was downgraded. We were having debt ceiling fights. Europe was in its same pickle that it seems to have been in regarding deflationary tendencies, perhaps a recession, and all of those questions were flying around, and the markets declined by 20%. There's always something to be scared about. But if you're a long-term investor, less expensive prices are usually not something that makes you want to run for the hills. It's something that makes you think about your core thesis, why you got invested in the first place, if you still have the same goals, and if you do, potentially about buying more, potentially about adding things when the prices are right, when things are inexpensive.
For more information and data on closed-end funds, visit our sponsor, cefconnect.com, the authority on closed-end funds. This is Closed-End Fund News. Thanks for watching.